Gary Wagner joins us ahead of the much anticipated GDP numbers. Gary, thanks for being with us.
It's great to be here. My pleasure to be here as always.
Now, Gary, before we get into growth numbers, let's get your thoughts on Wednesday's FOMC statement and how gold has responded to it.
I think when we look at the words that came out of the FOMC meeting on Wednesday, the key word really was patience, and that they're going to be a little bit slower to raise interest rates. And of course, we see how that affected the market.
So we have GDP numbers coming out this morning, and this week we really had a mixed bag of data. We saw weak durable goods, better than expected consumer confidence, pending home sales fell. Are you expecting robust numbers for the U.S. economy?
Now, in terms of the GDP, of course, that will be coming out in a little while. But we've gotten some estimates, both from the Wall Street Journal and Wells Fargo, are looking for a 3% growth. We've had estimates up to 3.6% growth in terms of the GDP. But I do expect the GDP numbers to come in and be strong. I think that the U.S. economy currently is on track and doing well.
So, Gary, what levels are you looking at for gold?
Well, in terms of the levels for gold that we're currently looking at, I think the key level we want to look at right now is about 1238. Of course, if you recall, 2 weeks ago, as the market was rising, we were looking for the market to track as high as 1300 to 1312. I think we hit an intraday high of 1308. Whenever you get a market that moves up as quickly as gold has, and if you look at a daily or weekly chart, you'll see almost a parabolic rise in gold prices, you can expect those corrections to be just as strong. In other words, if it's going to move up very quickly, it's going to come back down and correct very quickly. Long term, I am still bullish. The question is, where do you look to re-enter the market?
Well, on that note, let's get to your insert. What have you brought us this week?
The insert that I brought you today is basically going to be looking at the most recent correction that we saw on Thursday in gold, how that affects our overall strategy and outlook for gold over the next couple of weeks.
All right, let's get to it.
Absolutely, no doubt we had a most interesting week in the markets pretty much across the board. We saw dramatic declines at the beginning of this week in the equities markets, taking it down to approximately 1985 on the S&P. This is the E-mini that we're looking at here. It is a half-a-day chart. We can see that over the most recent time period, meaning over this last month, although we've hit these lows in here, the one thing that we can see is that we now have had a series of higher lows, and we'll have to obviously see if we get any kind of follow through now that we've gotten these series of higher lows, if we can now go and get a higher high. When we look at the dollar, we also see that although it was under pressure, hit these highs at around 96 in terms of the index, it did come down and is now moving back up to these highs that we have seen most recently. Oil continues to slide, and as of Thursday, we're recording this Thursday afternoon, is now below $45 a barrel, trading at $44.59. The most logical area to look at on a technical basis is the fact that we could see oil genuinely go back into the 30s, whether it's the high 30s, mid 30s, or low 30s. We are now only about $5 away from that. So what does that mean for gold? There's no doubt we identified the fact that once the market broke above this long-standing resistance line, this mark here being approximately 1217, that we should probably get a fairly sizable breakout. And we did get that, almost a straight linear or parabolic move to the upside as we saw gold break above 1300. If you recall from a couple of weeks ago, we did look at the potential for gold to move anywhere between 1300 and about 1312 on the high side as this market was moving back up. Now, looking back at it and looking at this intraday high of about 1308, we do believe that gold hit the mark that we were looking for it to go to. Now, markets don't tend to move straight up or straight down, and we are absolutely experiencing a correction from this most recent move. So the real question becomes if in fact we have entered a bullish phase in the market, and I believe that all the technical evidence is pointing towards that, where can we expect this current correction to end, and where can we look to find support in gold? On this particular chart, you can see a couple of different fib retracement levels. The longest one going from 1386 down to approximately 1130. And when we do that, we get a 50% retracement at 1257.89. So call it about 1258, 1257. And we can see that that is pretty much precisely where the market has closed on Thursday's trading activity. So this would be our first logical place to look for any kind of support. My sense is that we'll probably drift a little bit lower, and the mark that I'm looking for is roughly 1246 to about 1240. So if the market can find some support here and move back up, fine. My sense is that we need to see the dust settle. We could see this market head a little bit lower, but the key to what we witnessed on this most recent move, and what is most important, is for the first time, we have had these series of higher lows, but they weren't being followed by higher highs. We were unable to take out these various highs, this one being roughly at about 1254. We absolutely got our higher high on this most recent rally. And to me, that is extremely bullish. So my sense is that at some point, we will find this market finding support, whether it's in this area at 1257 or as low as, say, 1240. We should see a conclusion to our current correction. So we've had a nice spike up. We're getting our corrective action down. And then if we are truly in a bullish trend, we will not only see support come into the market at some point, whether it's here or whether it's 1240, but we will see the market terminate the current correction, move back into rally mode, and our confirmation will be that we will take out this most recent high at 1308. That will give us some pretty concrete technical evidence that we are in a bullish rally. If that happens, where could we expect the market to go to? Well, there's a couple of areas. We really need to take out 1321, and that's the next mark that I would look at. For those of you that like this type of commentary, I invite you to try our daily forecast. We have a 1-week trial that's available. Simply go to our website, thegoldforecast.com. You'll see a button that says free trial. Click that, set up your account, and you'll be able to view our daily report all next week, all 5 issues, Monday through Friday. Again, my current assessment in gold in terms of where we'll find support, and if we find support, my upside targets for where the market could move to.
Thanks so much for joining us, Gary, and I wish you a wonderful weekend. My pleasure as always. And I do want to wish all of our Chartist viewers a great weekend and prosperous trading and investing next week. We'll talk to you real soon. Bye-bye. And to all our viewers, enjoy Super Bowl Sunday. We'll see you next week. Thanks for watching.